What is going on, everybody? Happy Friday. Welcome back for another episode of Benzinga Powerball. Rather than giving you our disaster of the day, our wild winner, our hot pick, I've got a special guest joining us. And even though we won't get our typical segments that we're used to every day, I promise you we have a hot stock. Producer AT, can we bring D onto the stream? What is going on, man?
Good. How are you, Luke?
Doing well. I am joined by Choubey, CEO of MoneyLion. Stock is up 764% over the past 12 months. Does that feel good?
Look, it definitely feels better for the team and for what we're doing. It should have never been where it was last year, but certainly, I think the markets are understanding the unique value proposition that we're bringing to the table.
Yeah, and I think it goes beyond that, right? As somebody who's talking to and interacting with investor communities every day, when we look at where the stock was at a year ago, I feel like a lot of the narrative and a lot of the dialogue is can MoneyLion continue to be a publicly traded stock? Yeah. The sentiment was so negative. We fast forward to today, again, up 764% over the course of a year. And that sentiment has absolutely changed from on death's door to, okay, this is one to watch in a really serious way. Yeah. We just had earnings results out, I think maybe 2 days ago. Let's start with the numbers. You have 29% top line growth for the quarter year-over-year basis. It takes you to 121 million. EBITDA up 222%. That's going to be bottom of your income statement. So there's going to be a lot more sensitivity, but up 222% to 23 million. Let's start at the basics. I mean, you and I have talked every quarter for maybe 3 years at this point. But for folks who aren't familiar with the story, can you give us some of the pillars as to what's driving the growth?
Yeah, look, I think let's start with kind of the vision of the business, right? Our vision is that within 3 years, we're going to be the number one destination for consumers to make their financial product buying decision. So we're a marketplace, right? So a year ago, as you said, there were a lot of questions about the business model. We came public via a SPAC. We brought to market a high growth neobanking model. And we've changed that significantly, right? So we're today marketplace first. Consumers can think of us as an Amazon-like marketplace. Our information advantages are increasing. We offer both first-party products and third-party products. So you'll see on our income statement a consumer line and an enterprise line. So in Q1, when we released earnings, $121 million of top line, powered by a really strong consumer business. Our enterprise business is our B2B business, where we're providing white-labeled embedded financial marketplaces to any brand. Publishers like yourselves, CNBC, all the way down, are using our embedded finance white label technology to match their consumers with financial products. And in so doing, the information advantages in our network are increasing every single day, right? So what that now is doing is it's creating a really durable business model, right? So we've said that we've been on the path to profitability. A year ago, there was, because we came public via SPAC, there was concern that, hey, this is a high growth, 100% plus year-over-year growth, but negative 60 million of EBITDA. So we've now completely changed the course on that. We had record adjusted EBITDA of 23 million. This was up again significantly from last year, right? 480 basis points of margin expansion, so quarter over quarter. There was seasonality in Q1. There always will be, given our consumer business, tax returns, tax receipts. But we exceeded guidance. We guided to 15 to 18 million, and we hit 23 million of adjusted EBITDA. And most importantly, it was a record GAAP net income for us, right? So this is the ultimate gold standard of profitability.
This is the Warren Buffett number.
Exactly, right? Look, our adjusted EBITDA number is quite clean. But even then, when you're able to show 60 cents of EPS, it's a great milestone for the company. We've been building publicly for 11 years, venture-backed company, came public via SPAC. We did 2 acquisitions. So it took a little bit of time for the business model to season. And now that it's kind of really kind of humming, we're just at the beginning, right? So the stock price movement is great, but I've been telling people internally for a long time that we are not our stock price. It's a voting machine in the short run and a weighing machine in the long run. And I think what investors are finally realizing is that the unique set of assets inside of MoneyLion really position us to be a much larger business, right? I mean, forget what's happened over the last year. We think that, going forward, we're not even back to the starting line yet, right? If you think about where, what the market cap of the business was when we brought it public, then you're starting to get more towards where we think this business is properly valued. Now we're executing like heck. We've got, 500 engineers, product builders, data scientists, operations folks that are innovating, right? So we're at the bleeding edge on the form factor perspective as well. So that's why I get a lot of confidence in this business, is because it's not just what we've been able to do in the last 12 months, it's where we're going in the next 12 months.
And one of the numbers that jumped out at me out of this most recent quarter is a year-over-year basis, 98% increase in customers. You basically doubled the number of customers. What are like the key value props that you're marketing to customers, which they're joining MoneyLion for? So that's part one. Yeah. And then two, what are the big channels through which you're acquiring them?
So look, we've positioned the business as the ultimate financial product marketplace. 3 years ago, when you came through and became when you became a customer of MoneyLion, you had to open a bank account, a digital wallet, a bank account, and then go through that process. Mm-hmm. Now you can be a customer of MoneyLion just by being a marketplace customer, right? So everything from AI-powered insights, money-adjacent content and community. We have our own studio. We've talked about that in the past. We've got great relationships with thousands of creators. We can create our own shows. A lot of people talk about financial literacy and financial wellness, right? A lot of people have a high horse about that. We're the ones who are actually spending marketing dollars to create best-in-class content around everything you can think about personal financial management, right? So we had Brandon Copeland's No Money win awards this quarter. We produced that in our own studio. So all of that is now coming together to draw people into the ecosystem. We have Reddit-style community boards, right? So you can go to MoneyLion and search for how to think about taxes, 401ks, starting businesses. And not only are we giving you back blogs and kind of written content, but we're actually giving you back what actual practitioners are doing in community forums. And I think I really think that's going to be one of the glues that keeps this community together, whether it's reviews and ratings. And then, of course, we have first-party products like our digital wallet, credit monitoring, credit building, roundups. We have the entire spectrum, so you can start with managed investing, which is where your 80% of your money should be. Got an active investing capability. You can trade stocks. You can round up into Bitcoin. So all of that together creates the first-party basis. And then through the marketplace, you can now get deeply integrated access to a whole host of personal loans, auto loans, student loan refinances, HELOCs, fixed rate, second lien mortgages, credit cards, insurance, autos coming back, right? So the entire, no reason to leave our ecosystem strategy is being executed through a combination of our first party products and importantly, our third-party products. Now, the linchpin of our business model is that whatever we build for our consumer products, we make available to the entire network, right? So we're a brand that is, of course, available to anyone to download, but it's available as a piece of technology on a white label basis across the internet.
Okay. And we've had the conversation about the white labeled for like 4 quarters straight, and Benzinga should be utilizing it. We need to actually have that conversation. And get me in touch with whoever on your team we should talk to. Because then maybe I can circle back next quarter and say, hey, here's a demo of how it works on our site.
Yeah, I can do that.
But I saw a press release yesterday about the content studio. For one, Bill is back. Nice to see that name there. Yeah. 2, I didn't realize what the content studio business is. So I'm guessing a lot of others don't. Could you explain that one to us?
Yeah, absolutely. So this is a acquisition we made a couple of years ago. Initially, the purpose of the acquisition was so we can be the leading storyteller for money adjacent conversations and content, right? So, the thesis was that Americans are getting their financial education from TikTok and Instagram. And then, you'd see 2 reels on starting a business, and then you'd see reels about some other part of your lifestyle. We wanted to basically say, we want to be the hub for financial training, financial education, financial content. Let's learn from our peers. And Malka, which is the name of the company that we bought, media business, had all of these execution capabilities. They had the influencers, they had the studios, they had the shows, and we integrated, and they had the culture, right? The culture of money was really important as well, because, the way people consume content, we wanted to bring that into financial transactions and financial services. So that has become an integral part of our consumer-facing product, right? So the content feed, original series, personalized content, feeds, short-form videos, all of them are best in class inside of the consumer proposition. But because we have this B2B enterprise,
and so just real quick to stop you there. So we were talking a second ago about channels for customer acquisition. Is this one of those big channels that's driving consumers into the MoneyLion ecosystem?
Yeah, it makes our consumer value proposition really strong.
Okay.
But as I said before, whatever we do for ourselves, we make that available to our clients.
Mm-hmm.
Our clients that are banks, that are wealth managers, that are investment banks, that are big networks, right? Like the MasterCards of the world. So they're coming to us and saying, hey, look, there's an opportunity now, because we're creating a lot of content, but it's not searchable, it's not embeddable, it's not snackable, it's not short form. So what we're doing is we're using that same technology that we have for our mobile app. We're now making that available to Bank ABC, Investment Bank DEF, right?
Yep.
And that's seeing a lot of traction now, right? Because this is every one of these financial institutions can now display their research reports, their economists' reports, their trends, their top picks, their market updates in a way that's that today's consumer. You don't have to be a young person, by the way. Even the millennials and the Gen Xers are now consuming content on a mobile device. They want to be able to scroll. They want to be able to search. They want to be able to share. So we're now using our capabilities in the media division to be able to do that on a B2B services basis for a lot of our enterprise clients.
Okay. And let me ask you one more. Rates. We're now at about a 50-50 odds that the market is saying where there will be a rate cut in September. Let's say rates stay elevated. What does that do for your business? And I assume, tell me if I'm wrong, but I assume that if rates come down, it's better for the business as more people are taking out loans and getting money, et cetera.
Yeah. So we try to abstract away from the rate regime. We said, we said on our earnings call that there are 4 pillars of growth. There's continued growth in our consumer business. The consumer's strong, unemployment's low. That's the benefit of where we are from an economy perspective. We're going to relentlessly continue optimizing our funnel, right? So as you said, we have over 15 million total customers now, millions more, 80 million inquiries last quarter for products in our network. So the network is expanding. So as we continue optimizing the funnel, getting those consumers into the right third-party products, first-party products continues to increase margin for us. Product and vertical expansion. So we'll abstract away from macro by growing credit cards, growing insurance, growing mortgages. Historically, those were smaller, areas for us. So again, using the same technology that made personal loans successful for us, doing that in credit cards, mortgages, and insurance is a growth driver. And then expanded distribution, what we did with Ernst & Young, EY, what we're doing with other partners in terms of distribution. Those are the 4 ways.
Well, okay. I want to talk about the EY deal in a second, but actually let's talk about rates again. So you said you want to get out of the rate race. I mean that you still have to have the business has still got to be pretty tied to rates, though, correct?
So
I see the
look, I mean, 2 years ago, off our enterprise business, 90% was personal loans. So we've diversified that down to 55%.
Okay.
And the other thing I would say is if conversion rates, you're seeing substitution effects on both sides. Like what happens when rates go up, right? The lenders basically need to increase their interest rate because their cost of capital has gone up.
Yep.
But the margin that they want to have on a lending product is going to maybe come down a little bit, but it's going to stay. It's not going to be. They still need to. They still need to cover their marketing and their operations costs.
I think that's fair.
So when this happens, marketing dollars come down. We're at trough levels. I think we've kind of seen. Actually, we've seen the trough levels. We're rebounding a little bit here.
When would you say it bottomed out, the marketing?
Probably Q4 of last year. It was one of the slowest loan origination quarters probably in a decade, more 10 or 15 years, really, tell you the truth. Probably you have to go back to 2009, 2010 to see levels that low across the board. But again, as we abstract away from that, the consumer is also making different decisions. So the household that was getting a $50,000 loan available to them 3 years ago at an 8% interest rate to go redo their kitchen is now seeing that top line number come down. They're only getting offered $35,000. And now it's a 15, 16, 17, 18% interest rate. And the consumer's saying, no, thank you. I'll wait. I don't need to redo the kitchen. So substitution effects, Econ 101 are happening on both sides. If we saw the same conversion statistics from late 2022 and we applied it on the application flow that we're seeing today, our enterprise business would be at parity from a revenue perspective to our consumer business.
Okay.
So consumer was 67% in Q1 of the overall revenue.
Okay.
So only without doing anything on acquisition or any changes to the cost base, there's the macro reversion in interest rates creates a massive additional upside. And now there's also been pent up demand, right? Mm-hmm. So people have, a lot of the mortgage refinances are waiting. All the 5-year ARMs are coming up this year. 7-year ARMs are going to be coming up over the next 2 years. New home purchase volumes troughed out at 4.2 million new homes last year. Mm-hmm. Hopefully we see that go back to high 4s, low 5s, and on its way to 6 to 7 million, which is the steady state. So all of these are opportunities for us to continue, really being the co-pilot for our consumers on making the right financial decision for their household at the right time. So we're creating lots of tools, lots of financial education content, widgets, if I wanted to, if my ARM is expiring this year, how much should I pay down on my mortgage to keep my monthly rate the same? Like those types of calculators, people don't want to have to go do massive Excel sheets. They just want to, have capabilities to do that. And how is the community responding to these things as well? And that's really where MoneyLion, the product, comes into play as the companion in that shopping experience for this consumer. And that's why the vision here is that in 3 years, we're going to be the #1 destination to help consumers make their best financial decision.
All right. And D, I know I keep saying one more, but it's an exciting business.
Yeah.
It's a Friday afternoon. The stocks. I know you have stock pages on the MoneyLion side. I was just pulling one up. Where does investing fall in the priority set, individual stocks, all that sort of thing?
Yeah, so we have 3 capabilities today. So our managed investing capability is a traditional robo-advisor, right? Yep. And it costs anywhere from $1 to $5 a month to use it. It's part of our membership program. It's embedded in our membership program if you're a member of MoneyLion. And we're proud of that product. We'd put it up against anything the wirehouses would have or any of the best standalone robo-advisors. Okay. And we believe that
did you build that all yourself, or is it
white label? We built it all in-house. Okay. And this is we started in
That's
2017.
Impressive.
Yeah.
There's entire businesses that only do that.
Exactly. So for a lot of our consumers, we're the first investment account, right? So we want to grow that business over time. Okay. Right. So one of the constraints that we've had over last year, right? Was to prove to the markets that we don't have to overspend on marketing. So we really haven't put a lot of marketing and go-to-market money behind our investing products. We also have active trading, right? So again, you have to be a member to use our active trading program. We may revisit that at some point in the future, but right now we believe that we want to foster this community of members. So there's a lot of guided content around that active trading capability. But again, I'm a member. I can trade everything from certain small cap stocks all the way to the FANG and NVIDIA and what have you. And that works really well. But again, it's really meant for an education and engagement perspective today in 2024.
Mm-hmm.
I will tell you that when we have degrees of freedom, we will put more marketing dollars, more go-to-market capabilities behind making this an even bigger value proposition. And then, of course, we've got a very, very popular Bitcoin roundup capability where I can swipe my debit card, and every single day, whether Bitcoin's at 16,000 or 70,000, I'm dollar cost averaging intraday multiple times as I spend. Right. So I have done it personally. A lot of our consumers have done it since Bitcoin was at 16,000 all the way to 70,000.
Good for them.
For the average American household, it's an incredible way to learn and get exposure to this asset class. Right. So together we have the full spectrum. I think that we are early innings in actually bringing it all in from a packaging perspective to certain segments and cohorts of our consumers.
All right, let's end it on a fun one. Crypto exposure for yourself. You personally, outside of MoneyLion, love it, hate it, significant, insignificant. Where are you at?
Whether you love it or hate it, philosophically, I think you have to have exposure.
Okay.
So, like I follow personally the rules of thumb, anywhere from, 5 to 10 to 15% of, the dollars that you feel comfortable investing. And, I kind of have exposure. I've trimmed exposure to a lot of the alternatives, and I've concentrated my exposure to the ones where we know that there are a lot of tailwinds from both a sovereign government and also an ETF backing, right? So they're the top three, if you will, the Bitcoins, the Ethereums, the Solanas of the world.
Awesome. All right, D, I appreciate you joining us on this Friday. Congratulations on the quarter. I've said that for many quarters in a row.
I appreciate
I'll follow it up by saying congratulations on the market seeing the story that you've been telling for the past 3 years or however long it's been. Appreciate you chatting, and let's catch up next quarter.
Great. Thank you. Talk soon. Have a good weekend.
Thank you. All righty, Zingers. We did not have our normal disaster of the day, wild winner, hot pick, but I still brought you a hot stock. Again, the company is MoneyLion. The ticker is ML. That's Mike Lima. Happy trading. Signing out from Detroit HQ at Benzinga. I will see you all on Tuesday.